Hello, everybody. Good morning. It is Monday, November 21. It is a very short week. We have essentially today and tomorrow. Wednesday has traditionally been a incredibly light volume day, finished by around 10 o'clock in the morning. It's always been a very slow day, traditionally, going back through the years. On Friday, it's only a half day. We're open at the opening bell. It's the old bring your kid to work day on the New York Stock Exchange. I don't even know if they do that anymore. But anyway, the market's closed at 1 o'clock. And it, again, is another very light volume, very low intensity kind of day. But on that, traditionally, this is a very bullish week. And going back and looking through the prior Novembers, this is the week when the high of the month had always produced, always during this week of November. And again, it comes back to that point of there being no sellers. Friday, incredible, man. It was incredible. I swore we would close red, but regardless, 4,000, all spreads in the 4,000s retired worthless. I had a couple of people messages to me. They got in 95, they got $1. The 39.80, 39.85 risks over 100%. And the 39.55, 39.50, you got to be crazy trade so that we actually do close red, drop down to as low as $1 midday. They dropped down to $1 later in the day when it was part two to go into. And again, 260% trade on that, scalping out at $1. Obviously, you had to be a day trader to do it. But like I had posted in here, anybody that wanted to get in early on and avoid that, day trade rule, you could get into these Monday 38.85 puts, 38.90 puts being a bullish trade, and you were getting about 65 cents. Again, you're getting over 11%. Fantastic. Even with the little dip that I'm going to show you in a minute here, nothing really to worry about. And again, here was the other one on the Black Friday debit spread, looking at this week Friday, buying the 280 calls on QQQ and selling the 286 calls. They weren't printing at $3 quite. They were just over $3, but it's a $3 trade with a maximum of $6 total. So you're looking at 100% profit on this if we can get that close up at 286, and I'm going to go over that in a minute here. But as I go over that, I want to share with you how back 2 weeks ago, when I was focusing everybody's attention on December 16th, you saw how those December 16th calls worked and how well they worked out. I would again behoove you to look towards December 16th as you're including quite a bit involved in what these are. And I'm actually looking at the December 2 is what I was looking at. December 2 QQQ 286 calls. For whatever reason on Friday, I was very focused in on that. I liked the pricing on it. I liked the way that it looked. And I had it up on the screen. I'll have a look at it later on today. But again, here we are. We are at minus 20 right now on the futures. And our range has really, really started to decrease. So our range is getting a lot tighter for trading these spreads. Doesn't mean that we're going to be stuck in that range, but it definitely is to a benefit when we are going to be on the right side. And the right side where I would be looking right now would be at selling the put spread, selling the 39.10, selling the 3900s down in that range, knowing that we have that 100-day moving average. So we'll look into that. But yeah, range last week, 52 on Monday, 75 when we dropped there on Tuesday, minus less than 30 points on Wednesday and less than 50 points on both Thursday and Friday. So we are going into the holiday lethargic kind of trading and buying and selling calls and puts is going to be a very disadvantageous kind of strategy. Whereas selling spreads and letting them decay, this is a fantastic time to be involved in that. So anyway, here on the futures, I apologize for taking so long. Looking over here mainly at the RSIs, and the RSI over here on the NASDAQ, it lost that 11,700 prior to the weekend. It's hovering right above that 10-day moving average and hovering right above oversold. The Dow, still the strongest index out there, continues to be the strongest index out there. The Russell 2000, not horrible, but it's still being a supportive character, and that's why you've got the SPX stuck in the middle here, where unable to really break out into the 4,000s until you get a push over here out of the NASDAQ. And again, being supportive, you can almost see an identical chart pattern between the three of these where you have less of a dip over here on the Dow. And again, that just goes to show you how it's one of the stronger characters out there. Again, here at QQQ, we had that 9% run, 3% dip, hovering here in the middle, above the 100-day moving average, which is moving higher. 50-day moving average is starting to move a little bit lower, only because we had that dip just a couple of weeks ago. It will start trending back up, but for the most part, we are focused here in this 3,900 range and going to be looking up higher here at this 4060, plausibly into the 4100s, which could take place this week, but I would rather think that it could take place as we go into the first week of December. This is the reason why. The reason why being QQQ. QQQ, this 280, 281 level is what I'm calling the bottom to go out there and buy calls and get into a long position for December, January. And that 286 level is where I prefer the strike, even though I am looking for this 294, 296.50 to be shoved into as we start heading into Christmas. That's my view. Until I start seeing a close down here in the 280, 275 area, I have no reason to change my view on that whatsoever. And one of those reasons why is not necessarily Apple, but since we're here on Apple, again, failing at this 152 area, it's continued to be a little bit of a problem. 145 continues to be a very strong initial support level because it was just too advantageous to be buying it down here, down in the minus 140 area. So maybe a drop down to 145. I don't think so. But again, looking for this to be pushing up to that 157 as we start heading into the beginning part of December. But to close you out, this is where my attention continues to be, and it always has a lot of my attention. The dollar index is up incredibly today. I'll pull it up in a second. But the VIX is still extremely lethargic, and the VIX is still wanting to get down here and start pushing down into this 2102 and fill that old gap from way back in August. It still wants to get down there. And while it still wants to get down there, that's advantageous for the indexes to be looking higher, and why I still continue to have a bullish view, looking to get up there and start seeing some 4,000 closes as we start heading into the first week of January or of December and start heading into the FOMC meeting. But quickly here, pull this up. You can see it. DXY. Absolute ripper coming over here out of DXY, up almost 1%. And this is why you are having a little bit of a dip over here as we start heading into the start of the week. Dollar index on the 1 hour, very overbought. So we should be seeing a dip. Another one to look through, which we were tracking the other week or the other day in the futures room, is never expected to see this 81.34 get broken. And it held, it supported, it did pretty well. And then all of a sudden there on Friday, it just took a complete rug pull and ripped through that 81.34 down to the 76.89. And to show you this 76.89, I'm looking here at a 6-month chart. And you see where the 76.89 is, right? Here's a 1-year chart, and you see where this 76.89 is. Well, let me pull it out for you and show you here. Here's a 3-year chart. You see where that 76.89 is right there. That's where that 76.89 comes from. It's this retracement here, the 50 retracement from the all-time highs back in 2008 to the all-time lows that we posted there in COVID. Right there is where we're at. We're hovering on that 76.89. You could see prior to it even existing, it was resistance here back in 2018. Prior to existing, it was support here in 2011, 2012. So you got a major pivot over here. And if anything, I would think that we look a little bit more like this than we look like coming down, breaking through it, and just crashing through. You can even see it going back here over into 2006, how it was resistance before you had that dip and then that massive rally up into it. Again, I'm stuck on that 76.89. I'm not going to waste your time, man. It's Monday. Guys, have a fantastic Monday. I am here for you all week. If you want to do any one-on-one calls, just send me a private message. More or less, I'll be around all week.